First Republic Bank is down 28% this morning. So they finally reported their quarterly earnings. And we know, thinking back, that the regional banks were a total disaster. We had Silicon Valley Bank going under, and of course, First Republic was in trouble. And right now, you can see they are getting beat down. Now, before we go any further, let's take a look at this chart. So let's go and look at a 3-month chart on First Republic. Back here in January, the stock price, $147, okay? I'm sorry, February 1st, so right after January. Next, it gets down to March 7th, $115. All right, March 7th. Now we go to March 12th, just a few days later, $31. Now let's go on a little bit further. March 16th, $23. Now we are coming down here, $12. It's $15. It got as low as 52-week low, $17.55. And today we're sitting at, today we're sitting at $11.62. So guys, the irrationality that we've seen in the banks has been something that I haven't seen in my investing lifetime. I have spoke to many people, including a bank analyst that I trust very much who works at a very big firm. And he said, and you've heard this from Warren Buffett himself, if there was not a run on Silicon Valley Bank, that bank would still be in existence. This bank, I feel, is lucky to be in existence. They got massive cash injections. They weren't doing the swaps that they were supposed to be doing. If it weren't for social media, Twitter, news spreading so quickly, Silicon Valley Bank would still be in existence. Now, let's take that factor out. Contagion has been released in banks. Let's pull out the press release for First Republic. Revenues were down. Were $1.2 billion, down 13.4%. That scares the hell out of people. No matter which way you spin it, that scares the hell out of people, even though it was an insane March. Net interest income was $923 million, down 19.4%. Net interest income was $269 million, down 32.9%. Now, the biggest number that came out of here, and I'm going to pull it up in a CNBC story. This is the big headline of the day. First Republic says deposits tumbled 40% to 104.5. So they basically lost $100 billion in deposits. Now, for me, as a calm person that looks at this, I would say, okay, they lost. Yeah, I'm sure that they did lose $100 billion in deposits because there were a lot of people out there that had a lot of fear. You look at any of the other regional banks, I'm sure they lost a lot of money in deposits. But you just look a little bit further on and looking right here, let's see. Deposit activity began to stabilize. This is from the CEO. Beginning in the week of March 27th, 2023, and has remained stable through April 21st, 2023. Total deposits were $102 billion as of April 21st, down only 1.7% from March 31st of 2023. So I look at that as an objective person and say, okay, things are stabilizing. Now that the chaos is out of the news, I was talking with Tim yesterday. We were talking about videos to do. This one kind of fell in our lap. I was saying, Tim, let's do another video on the banks. The problem is, nobody's talking about the banks anymore. What happened to the banks? Nobody's even worrying about it because the contagion is quiet for now. This might spark it back up. But the point is, once you get the news out of there and stop driving down the bank stocks, there's really not much there. The banks have stabilized. This is a major overreaction, in my opinion, to what had already happened and what we already knew had happened in the middle of March. You knew it was going to be bad for regional banks, specifically for First Republic. So let's continue on here. The deposit figure for the end of March included $30 billion in time deposits from 11 larger banks. Okay. Now, there was something in here that I wanted to state. I read it on the morning show. First Republic has maintained over 97% of client relationships from the start of the quarter. So, today's April 25th. So, within the first 25 days, they've been perfectly fine. It was the big overreaction, and that's why $100 billion left the bank. People were worried. Now, there's not so much of a concern there. Now, because of the big $100 billion loss, they are going to be laying off about 20 to 25% of the staff in the second quarter. In every life, a little rain must fall, as they say. So guys, the big takeaway here, when we look at something like this, and I wish I understood banks. I wish I could analyze a bank. I was texting Paul this morning and I was texting Dalton this morning. I wish that I could understand banks. We are actively trying to learn them. But when I see something like this, I say to them, and then I see all those stats in there that are saying there's stability in the banks, there's stability from clientele, et cetera. This makes me get so excited and say, man, I wish I understood this enough to figure out what price I could pay for this. Because if it was to me a $15, $20 stock and this thing went down to $11.52, I am jumping up and down, so excited to go and buy this thing. Because you need to understand, irrationality of the market is going to drive things. There is absolutely no way that this thing should be down 28% as a result of what we already knew happened in the previous quarter. We knew it was going to be bad. Maybe they didn't know it was going to be this bad, but to lessen the bank's value by 28% in the morning? I mean, if you're going to start doing that, this is what spreads contagion. Because if you don't think this is going to reverberate into other banks, why don't we just check it? I haven't looked at any this morning, so let's check it. Let's look at Key Corp. What is Key Corp doing? Down about 5% this morning. Okay, let's look at another one. Let's look at CFG, Citizens Financial Group. Okay, not getting affected that much today. TD, Toronto, down about 2%. FMNB, Farmers National, down about 2% today. So when you start seeing these types of things happen, where you get a 28% drop in a regional bank, you will start seeing slow contagion. Go back and watch the video that I talked about the contagion in the banks. Go back and watch the video that I talked about the Minsky moment. We'll put it right here. That is the type of event that happens. These types of contagions don't happen as a matter of, let's say, whatever it was. Let's say March 15th of 2023. And Silicon Valley Bank goes under and First Republic gets tanked. Okay, and now the Fed comes in, they guarantee deposits, everything's good. It doesn't work like that. By April 15th, we're just fine. We're all good. No. This thing can last 2 years. This thing can last 3 years. And it's a slow bleed. And if you listen to Buffett, if you listen to Mohamed El-Erian, if you listen to anybody that understands the banking industry, that is the problem that you get. So when I see something like First Republic, remember, try to take advantage of these. If you don't understand banking, do not chase something like this. But if this happens in a sector like tech that you can understand, if this happens in a sector like retail that you can understand, please take advantage of these types of opportunities. Now, this is an earnings reaction video. They reported earnings last night, this morning, whatever it is, there's a big reaction. We do these types of videos all the time. And later today, we're going to be hitting Microsoft. We're going to be hitting Google. We're going to be hitting Visa, I believe. Those are the types of reaction videos we do. Tomorrow we have Meta. Thursday we have Amazon. And then in the next week, we have other stocks coming like Apple. Instant reactions to big types of news. Do not let the media drive your process. Come up with your own process. Subscribe to the channel. You'll be happy that you've done. Have a great day.